Good morning, everybody. Welcome to the Flow Show. Hope you're doing all right. Morning, Kay.
Good morning, Ryan. Good morning, everybody.
Just keep an eye on the trading screen because I'll keep an eye on dollar yuan. Let's put it on the screen there for you.
Don't say anything.
Ticking. Ticking up. It's ticking up. I'm looking at the 7 level again. I'll keep an eye on that.
Morning, everybody.
Morning, mate. You all right?
I'm very good, thank you.
Yeah, so I might be having a little trade as we speak. Keep an eye on that at the moment. Right. Anyway, let's get stuck into things. Really. What are we going to look at first? A lot of stuff, or bits and pieces out of Japan, but we'll take a quick look at China. We had one of their, I wouldn't call it a rate meeting, but one of their, I don't know what you call it. I don't think it's not an auction, is it, Kay? Their MLF thing. Anyway, they have one of their MLF lending rates, and these are one of the rates that they've been cutting as part of their easing stimulus measures. So we went through that, and they kept rates there unchanged. The last time they moved them about 10 pips each. So while they kept the MLF unchanged, there were 4 of the largest banks that cut the deposit rates across the different maturities, 3 months, 6 months, 1 year, 3 year, between 10 pips and 15 pips. So although this MLF has remained unchanged, there's 4 banks who are cutting the deposit rate. A lot of people overall are seeing this as a pause of PBOC easing. I'm not sure that's the case. They're not exactly on a direct easing path, i.e. expectations for rate cuts every time this comes around. But even so, there is still some signs of easing going on there. I will point out we are still waiting potentially for a big main cut of the RRR, the reserve requirement ratio, which is the amount of reserves spare cash banks need to keep on their books as a percentage ratio. A cut to that ratio means they can take that money and use it to put into the economy, lend it out, whatever. That's part of one of their main easing measures there. Yeah, Kay, you got any news on this move in dollar yuan as we're looking at it?
Some of the banks have cut lending facilities to customers. I think that's the main thing, and a lot of opinion pieces about the situation in China being getting worse and worse than expectations and everything. I read a couple of articles. I think it's more of an expectations and growth move than really what the PBOC was doing overnight. They actually drained some liquidity, but then that's expected to come back into the market anytime soon anyway. And I wouldn't read too much in what they actually did or did not do overnight. But the local banks seem to be cutting some lending rate to clients.
Yeah, definitely. Right. Obviously, today is the meeting between Putin and Xi. So we don't really know a time on that, I don't believe, and it's more of a sideline meeting, so it's not even anything that's, as far as we're aware, has got a definitive time on it, nor whether we get comments out of it at all. I think it is likely we will get some comments, but that's going to be happening at some point today, we think. So we'll see what comes from that. Moving over to Japan, we'll start with the data. Pretty crappy looking trade balance numbers there, but again we're seeing a pickup in activity. Exports up 22.1%, missing expectations but still up on the 19% prior. Obviously one of the big causes for the imbalance there is the imports. Obviously the value of the yen, things like energy prices being high, it's a double whammy for imports. So that's probably the main reason we've got such a large imbalance, the value of goods that they're having to pay for to import. So it's still in a situation where the trade balance looks a bit crappy. but there's definitive skew factors behind it. Is that something Japan's going to be worried about, the trade balance, Kate, or
Absolutely.
are they giving it a bit of a rug brush because they see all these factors coming into it and affecting it?
No, it's absolutely something they are looking at, and they know it's weighing on the yen, and it's a bit of a vicious circle, because the weaker the yen goes, the crappier this trade balance could look. And if we look at the details about it, the average dollar yen rate taken for the calculation is 135, and we are like 10% or give and take 8% higher, or a bit less, maybe 6-7% higher even today. So no, it's quite worrying. You can have a bit of a negative trade balance if activity is really high. It's okay. Market will look completely through it, and the hurt won't be as big. But this is again a crappy number. Yeah, and if you look at current account being negative as well, those are still things which are weighing on the yen at times. So
Yeah.
no, it's not a good thing.
Yeah, definitely. Now we've had a bit of don't know what to call this, reverse psychology. We've had a ruling party LDP official Katayama out overnight with comments saying that intervention will not stop the yen decline, and particularly solo intervention won't likely be effective. So not really sticking to especially the MOF, Ministry of Finance rhetoric, in terms that they see intervention as one of their tools to stop obviously the yen weakness. But this one, he doesn't think it's going to work, which possibly is right, but what it does show is a bit of indecision from the government as to what's going to be effective for that. It's different because you would expect a lot of these guys all to be speaking along off the same script, but there is obviously differences within the political party. There's hawk stubs, etc., etc., but it's not done dollar yen any good this morning. Part of the reason why it's lifted up a bit, as we can see coming off the lows yesterday afternoon, it's had this move back up, not a huge move. Let's not build it up to more than it is, but those comments there may be a bit strange coming out of the government there. Obviously, solo intervention is something we've been mentioning on the show. Whether Japan has sought, wouldn't call it authorization, but at least a green light from someone like Janet Yellen at the Treasury. Kay mentioned it previously that their prior meeting may have, or likely would have been, a conversation on intervention. The US has been pretty quiet overall about dollar strength, which is something their silence is something to pick up on. But the solo intervention thing, yeah, definitely they probably do need help from somewhere else, or at least the authorization to go ahead from other central banks. So that's what's likely to really kick intervention in. There is always an effect that intervention may not last. The last few times they did it, depending on different reasons, intervention hasn't lasted. It's worn out while after, but it would give the market a bit of a shock initially, obviously, and we'll see dollar yen marked lower. Now, something that also has popped up, that firms in Japan, Reuters run a poll among firms in Japan where they expect dollar yen to be. Now, only 13% of firms thought it would be above 141 by the end of the year. Only 13%. So given all the moves that are happening, a very small number thought it was going to be above 141, meaning the majority think it's going to be below 141 by the end of the year, which leaves these firms at a bit of risk if they're planning their finances on levels below 141. if it stays above 141, obviously depending on whether they're importers or exporters. But 45% of firms said they saw the range between 136 and 140. 28% said they saw the range 131 to 135, and this is all by the end of the year. So yeah, they're looking for these moves not to last, for dollar yen to come back down. What do you make of those numbers, Kay? Are they
going back in history, when Japan was in deflation, they always tried to expect the dollar yen around 110, not below 100, and now we are in inflation and they expect it to be lower. It's just the opposite way around, and they all, it's more hopium than really exact expectations, knowing that the imbalance between imports and exports is so big. They will always try to expect rates to be a bit lower. But yeah, I mean, if you look on average, looking at the volatility, why not? For the rest, I don't really attach too much importance to it, unless we would be really far above here going into March next year at the end of the fiscal year. But that's there's still so much time to go in between now and then.
Yeah, and just thinking about the fiscal year thing, I mean, you know, we've got a lot of these the big whales, you know, the GPIF and all those sort of insurance companies, pension companies, who, you know, they hold a lot of foreign assets, and a lot of them went unhedged into this fiscal year, or their investments were unhedged on the FX side. They've had a bit of a windfall if they've been buying US assets, haven't they, beginning of the year?
Absolutely.
Is that going to be reflective at the close of the financial year? Are we going to see a lot of repatriation flows? And you know,
yeah,
indeed,
there could be a lot of there could be a lot of profits to be repatriated come March. That is a fact, and also they will need to, because for many years they have been underperforming whatever needs they have to keep up their pension payments. So they likely come March will need to repatriate quite a bit of profits if well, all else equal, if things don't change too much.
Yeah. So all right, it's quite a way away, but if dollar yen is still up at these high levels, then you know we should note it on our post-it notes, diaries, whatever you use, for that March period, that we could be seeing a lot of dollar or yen action in FX markets.
Yeah, and but the thing we have to note as well, that if ever like S&P and things like the equity markets start to crumble, then they will actually suffer on the other side of it. So for them, if the equity markets come off, like only for the equity markets, and if the bond markets come off as well, they will need dollar yen to be as high as possible to repatriate as much yen as possible. So I think they will have a big windfall, but all remains to be seen where we are towards the end of the fiscal year in all the assets markets. But as I said, that's music for later.
Yeah, and just keeping with the Japanese government quickly as well, we've had one of their policy chiefs, Hagida, if I'm pronouncing that right, saying that they will need 30 trillion in stimulus measures or packages to combat inflation. So again, these guys want to be spending again to try and combat inflation, chucking money at it. And as I can't remember who pointed it out, we're in such a strange situation where you've got central banks tightening and government spending money. Usually they go hand in hand. When a central bank tightens, a government doesn't want to spend money. So it's a bit of a strange situation that governments are effectively easing while the central banks are tightening. Obviously, Japan, it's a different kettle of fish because they're not doing anything on the central bank front. But they're keeping the easy measures there. 30 trillion was the number there. Now, the cabinet approval rating has dropped 12 percentage points to 32.3%. So citizens' views of what the government are up to are sliding a bit there. They can be a bit up and down, but what they're doing so far and it may be some inflation starting to pinch, etc., etc. Their rating has gone down. And we've also had the head of the Japanese banking industry commenting on FX moves. Nothing too strong. He was just saying the rapid FX fluctuations are not desirable for households and corporate management. So we had that industry head out last week, I think, with comments about the FX. Now we've got the head of the banking industry commenting on FX. So it's keeping the conversation going in Japan as to what's happening in FX. Lots of eyes on what's going on, which again raises the pressure on the Ministry of Finance to do something about it if we continue to see this volatility and the price rising there. Right, over to the Fed. Keep an eye on rate expectations this morning. After the CPI numbers, obviously, we saw those rate expectations jumping up, 100 basis point hikes coming into play. Yesterday's PPI, the market was watching, came in pretty much as expected. So nothing really of note to take from there. As a couple of our guys in our chat room noticed or notified, one of the big features of the CPI numbers or the inflation within the numbers is housing and rents. Those portions are not in the PPI data. It's more producers, manufacturers, that sort of thing. But the PPI largely as expected. Yesterday, the rate expectations were 67%, or the probability, 67% for 75 pip hike, 33% for 100 pip hike. Those have dropped slightly today. We're now 73% probability for 75, 27% probability for 100 pip hike. We heard Nomura had come out calling for 100 pips next week. We've had JP Morgan out overnight, and they're largely ruling out 100 pips. They say it's a pretty low risk chance of happening. So that's one of the big banks ruling that out. Probably one of the causes of why expectations have dipped a touch on that. I'm not sure if we've had anything from Goldies or any of the others on those at the moment, but they could drive expectations if they drop their notes on what they think is going to go next week. As for the ECB, load of wafflers out this morning with the same old rubbish. So nothing of note there. We've had De Guindos, we've had Villeroy, Macluc, or if I pronounced him correctly, nothing of note, all going about more hikes needed and more to be done and blah, blah, blah. Really, the rest of it, US data today, a lot of data coming out, decent data as well. We've got jobless claims. We've got the Empire manufacturing, which is the first manufacturing data of September. We've also got the Philly Fed on the same day as well, manufacturing too. So two manufacturing numbers there. Usually they come out a couple of days apart, but with the holiday, the US holiday that we had, that's kicked everything down the calendar. So those are coming out expected. Retail sales coming as well. So some big ticket data coming up today. That could be fairly busy for the dollar and yields. So we need to keep an eye on that there. Now, retail sales, you need to keep a look at. Expected to come in at 0.2% for the headline number versus flat prior. With these retail sales, you need to look for the propeller heads coming out on Twitter, all the analysts afterwards, giving a note on what real retail sales are, because these are not adjusted sales. So they don't take into account inflation and that sort of thing. But what we get is analysts coming out afterwards and saying, okay, if retail sales are up 1% on the headline, they might be down 2% in real terms. So keep an eye on that one, because it can affect what the market does with those numbers. Into the afternoon, it's industrial production from the US. So a bit of news there, coming to see how things are faring in the US on that side of things, manufacturing and production. Kay, you got any headlines you want to throw about or anything you heard?
No, just on this industrial production yesterday, we saw the European ones missing quite badly. So there could be a little bit of a gap there between the US and the Although, if I'm not mistaken, yesterday's IP for Europe were still July data, was it? And let me just quickly check. So, but anyway, there may be some difference creeping. That's it. It's July data, so they won't be. We can't compare them really. But anyway, the market, if it comes in positive, the market will perhaps think about a bit of a gap between the US and the EU again. But yeah, retail sales likely, and the Philly Fed. Jobless claims have not been market movers so far, although we've seen it relatively improving over the past weeks. So there's no real red flags over there. No. That's really it, mate. I'm not even sure it's going to move the markets that much because we are now slowly entering pre-FOMC territory as well, and we look at the rates. Parity seems to still be a big magnet for the euro, but there's probably going to be a couple of interesting things to talk about with Stelios on the metals.
Yeah, definitely.
Ryan, one thing I want to mention. Go on.
Sorry, Stel, just before I'll let you go. Just the headline popping up saying Z is to meet Putin soon. That's State TV saying that. That's popped up on the wires. How long soon? I don't know, but that's what they're saying. Sorry, mate. Go on, crack on.
No problem. First of all, I wanted to just give my opinion on the Fed and the next meeting. I think 25% chance of 100 or something like that, and 75 for his. Yeah, I mean, I think that's way too much. Who was it calling for that? I agree with JP Morgan. I really don't think they're going to do 100 because what would be the rationale to do 100? You know, the 75 is already very chunky. Inflation, yes, it's come up a little bit higher than expected, but we still have two readings which are kind of showing a very gradual easing. So I don't think there's panic for the Fed to do 100. So I think that's way too much. I would call it like a 5% chance maybe of an event for them to go 100, but I really don't see it.
I think you're being generous with 5, mate.
yeah, I think I'll be giving it 5. Yeah, but. Anyway, you did mention the metals as well, and man, I really think gold wants to break the 1680 level just to see what the market's going to do. I think the market's pushing that just to see just how many stops there are below, and I think there are huge amounts. And you know what? The other thing, we're seeing gold trade 1686, 7, 8, 9, $5-10 above this level. This tells me that maybe a part of the market is trying to lean against this, not lean against this number, but go long with that level as a stop, or maybe slightly below. So I think stops are actually increasing today below 1680, which I could be wrong, but I think that's this is kind of price action that we've seen in the past in many other instruments, and it kind of feels like people are trying to play this support once again. And I, you know me, I'm bullish on metals, but I don't think the support is going to hold this time. Look how important. Yes, exactly. 1, 2, 3, 4, 5. This is 6th time, and I think it's going to drop. The question is, how far down does it drop, and what does it do afterwards? I think we could easily see 1600. If that goes, and what's that 50%? 16, 17. Yeah, we could get to that 50% level. Nobody knows, obviously, but I think this could be a pretty big stop hunt here.
Yeah. For the boys and girls who are in our chat room, I've got some trades lined up for this one as well. Been waiting on it for a while, so you can check that out in our chat room. But yeah, this when you trade and you trade the techs, these are the sort of levels you want to look for. They can be really active, really strong. You can get strong reactions off them. You can get strong reactions if they break. There's always several ways to skin the cat, as we say in trading. So to set up for this one is something I'm doing at the moment. The worry, like you say, Stel, is the bounce really off the last test. Okay, 50 odd bucks, but still fairly weak. We're still getting these series of lower highs, and that's never good for a level. But as the saying goes, a level is a level until it's not. So it can break and go to 1600. It can bounce and go to 1800. You just never know. All we can do is sell our trades to plan for either event.
I was going
what are you making? Yeah,
go on, Karen. No, just one more comment I had. The bullish side to this price action, it doesn't look bullish, but there is one bit of bullishness to this price action, is that we still haven't broken while yields are going a lot higher, while the dollar is going a lot higher overall. I mean, not obviously over the past day or two. So this is still if you want to be a gold bull here, you really don't want 10-year US to break 350 and make a new high. If you think that's the scenario and it doesn't break 350, then I think a long here is not a bad trade. But obviously, you have to be very, very careful with your stop, because all stops are going to take it out. Personally, I think a better trade here is, even though I am bullish gold, I think a better trade here is to get short gold around here with a stop, say 1700, 1710, maybe something like that, and try to catch the drop when it does break below, because I think this is I think it's a more than a 50% scenario that we break below, and risk reward is probably something like 3-1. So if you add those two together, it's, I think, not too bad. That's what I would do, even though I'm bullish gold in the medium term. I think right now, probably the best way is to play it short, trying to catch the break lower.
Yeah, and that's a great point. It's still very much a metals bull, but you've got to respect the price action that's going on, and there's nothing wrong with trading the opposite way to your own bias if that's what the price action is telling you to do. You should never marry your bias. Always be prepared to go either way. And what about silver then, mate?
Well, silver's been trading better, but it's going to get taken with gold if gold breaks. The good thing with silver is that the lows are a lot lower percentage-wise than they are from where gold is. Gold is only $8 away from the lows. Silver is $1.50 or whatever it is. So I think silver is going to probably trade weak in the next few days, if gold breaks lower. But I still think these lows, 1780 something, whatever it was, I think they're going to hold. And again, silver also, it's been trading the last few days, last couple of weeks, trading relatively okay, even with the dollar rallying and yields going higher. So, there is a bullish aspect to this price action. But again, as with gold, I think the most likely scenario is for silver to trade lower from here. That's why I'm not, I got out of my positions yesterday and the day before, and, waiting for more price action.
Yeah, definitely, mate. Now, just for some of you boys and girls, if you're not aware of what goes on in our chat room, we do have a trades room, but we also have a lot of analysis that Stelios and everyone else puts up during the day. I'll give you a quick flick of the trades room there, so you can see what we do is we call our trades live, or when I say call our trades live, when we do them, we put them up as soon as is humanly possible. There is no hindsight trading here. No, I traded this an hour ago and I'm 50 pips up. You get all the details, and we don't do this. It's not a signal service. I want to be clear on that. It's not to give people ideas. Obviously, we can't stop anyone who follows. But what we do is we put the reasoning behind the trade, and a lot of the analysis is done in our general chat room. If I'm analysing some of my pairs, and I'll show you that from a bit earlier. Just putting in, what's happening in particular pairs as I'm trading them. I've got these trades on. And then in the trades room, we put our executions, when we cut, when we move stops, that sort of thing. It's all part of learning, understanding why someone's trading, getting the meaning, getting the thinking behind the trade. It's okay for me to come in here and say, right, I've bought euro dollar at 99.50 here. Boom, and that's all I tell you. That's useless to everybody. There's no reasoning behind it, me saying that. You guys don't learn anything. No one learns anything from that. And that's what we try and do in the trades room here and in the chat room here. It's not just about us putting our trades up. Oh, look at me, and I've made this and I've made that. You know, give me a pat on the back. It's about understanding why someone has put a trade on. Now, you've just heard from Stelios, you know, what his thoughts about gold and silver are, what he might do at a particular level. This is what we do each and every day in the chat room. So that when you look at an asset, when you want to ask a question of an asset, when you don't know what an asset's going to do at a particular level, you've got some information. You can ask a question, you can see what others are doing, and it can help you build your own way of trading. Doesn't mean you need to copy everything and be ignorant of learning. It just means you can build your own way of trading, see how others trade, see what the thought process is, and pick up the information from it. Think, oh, I didn't think of that, or I should have thought of that, or how are they managing that? Where should I put my stops? And you get to learn, you know, how other traders manage trades, how we manage trades, and you just get to see everything in real time. And I think that's the most important part. So what I'll do for you guys quickly is put the link up if you want to come and check out the chat room, as I want to do. And a lot of you guys and girls here on the Flow Show are in the chat room, so you know, don't take my word for it. You can ask the folks here in the chat what they think of it all. I'm sure they'll give it the thumbs up. But anyway, that's what Stel's view on that is. Kay, do you want to have a look at a couple of pairs?
Well, actually today, yeah, I can have a look if you want at what Stel was saying on gold, silver. I think the combination of all the data today, I hope you see my screens, right? So you've already showed the gold, and you actually have one more line than I have there, showing that 1670. I do have a bit of a trend line coming in around 1650. That could be a first stop as well. But yeah, the importance is mega. Everybody's looking at it, and I agree with Stel. People can be trying, because it works so many times, so people can try to buy it here and with a stop below, but do place your stop, because it could go very, very fast if it breaks. And the more people try, the bigger the stops will be below. And silver is indeed behaving much better. We've come off these lows. We've gone back into this kind of a range, but we're equally, but that's due to the dollar interest rates and everything. We're equally capping at certain levels. I have a little bit of support here around call it 19, 10, 15. But then I have another fib here waiting in the 1870s, and I think that if gold ever breaks this 1670-80, this could be a level where we go for a little revisit there on silver. I would not think that we are really ready to revisit those lows, but of course, never say never. But yeah, a bit same as Stelios, and at various levels I've been adding, taking it off, whatever. I do keep a long term in it because I think sooner or later this thing is going to take off, but it may be later than sooner. We'll have to wait what happens with the dollar and the Fed. Also, don't forget that September is we are doubling QT in the US, and it has without yields or interest rates moving that much, it has a tightening effect on financial conditions. So it is somewhere an underlying, under the surface, bubbling little river to support dollar on dips, in my opinion, right now. Yeah, the rest is really not. We're still talking about same levels in the euro. Cable, after having done those lows here, trying to break but failed. the 2020 lows. We are much more rangy, as I've been saying in the chat rooms as well. I do think we are a bit more rangy right now. Also helped by the fact that we have those risks of interventions in Japan. They seem to have quiet down actually the markets a little bit elsewhere as well. So we are in ranges on the euro. The dollar is still underlying bit, but we are in ranges. We on the euro we really need to break this 99 again or back above 102 to get going. Cable, in my opinion, rangy stuff. 114.80. The yesterday's call for a rebound. And then here around 115.75, then you add a bit of on around 116.10. I think we're in a range here, and let's treat it that way. It has a bit of weight hanging over it too, but there's potentially a couple of interesting things that may happen in the future because the Chancellor Kwarteng and Liz Truss are thinking about how to revamp the city and thinking about taking away the bonus cap for bankers that had been put in place together with the when we were still part of the EU zone after the crisis, and Liz Truss is even thinking about just thinking about canceling the sugar tax and just to help people to get through the crisis. So there are a few things perhaps bubbling in sterling, but I wouldn't trade them unless they are a done thing. If Kwarteng really goes to take away the bankers' bonus cap, it may underpin the sterling for a while, just because the market will speculate that the banks are could get back into the city instead of moving parts of their European head offices over to the continent, which they have done since we were talking about Brexit. On the dollar yen, quickly, I think we're in a range as well. 144, 140, yes, 143.15 is already a level, but that's a short-term one here, trend line. I'd rather have a look at this 142.60 because if we add the clouds on it, yesterday or this morning actually, we stopped on the Kijun line here, and if you move over to the daily, which was interesting there, is that the second line held the 142.50, and that was our low yesterday. And if we go back to the 4 hours, and if you look at the fibs, yesterday's low was around the 50% of the 140, 145 ramp higher. So I think this level is a bit is getting important now. 142.50, 60. If we start to get above 144, the figure again, I can't see too much to standing in the way of going for a retest. But there's still the risk of the Bank of Japan and the MOF rather being set. So if yen would go on its own, then the risk is increasing for interventions. If the dollar pulls higher altogether with all the other currencies, then I think there's very little they can do alone against a dollar move. Dollar CAD perhaps getting a bit more interesting. We are starting to really find this 132 figure 10 a bit of a tough zone. We are around 130, 160 right now, and then on the downside, also we've held the 50% of the latest move higher. So 129, I call it 60, 70, and then 132 figure 10 on the top side. Those are going to be pretty important levels going forward, I think. And then we have with an intermediate station around here, the 130 and a quarter. And really, the rest is just in general terms. And I'm going just to take the Euro Aussie as an example. We've seen this run up on the ECB and the expectations and everything, and then a pretty big rejection of trying to break above this 148.5, 149. Tried it once, tried it twice, coming back, but a bit bizarrely, yesterday we saw these all the euro crosses actually coming back down, including Euro Sterling, Euro Aussie, Euro Canada, and then today we are doing the opposite move. That tells me that really we are going to be in ranges for now. That is still my feeling. I said it yesterday a couple of times as well. I think we are really going to trade more ranges now. Somebody is asking about Sterling yen. Yeah. Oh no, I'm on the Euro Sterling here. Sterling yen. Here we go. I haven't really traded it for a while, but 165 is it 165 the figure? Is that a 38 fib? Oh, perhaps of this move, perhaps of the last move on the 1 hour. Okay, on the 1 hour, this move. Oh, okay. All right, Gavin. Yeah, 61.8. I'd rather really watch this one, to be fair with you, because we have a little bit more traffic around there. It's the 165, 65.70. But I'm quite interested in knowing what's going to happen if ever we. But that's perhaps a bit more medium term. But anyway, what's going to happen if ever we retest this trend line, because we have 1, 2. Okay, here we have had a few closes above, and with the last push higher when dollar yen flew up to 145 again. But it seems a bit tough to keep that level. So I think this one, for the more, let's say, a bit longer than a few hours, might be an interesting one. Because if it breaks again and holds, why not go and have a look at 168.75 again? And I have some targets as well, close to 170. But yeah, on the daily, on the day-to-day, could be here, could be there as well, 165.60. This one looks pretty cool as well, 164.30 in the really short term. It held here, and if ever we come for it, and this was a little bit of a springboard to do the last leg higher, 164.30. I'd keep an eye on that one. If it comes to retest and fails, we could be trading 150 points, 150 to 200 points lower on that one. So and really that's it for me for now. I'm waiting for those data. I think we are in a bit of a range. The combination of the data this afternoon can make the dollar move again. As Stelios was saying as well, watch that 350 on the US 10s. US 30 is trying to hold it, but watch this 350. If we start to get back, below, what is it? Something in the it's really 3 to 3.25, but there is a bit there's a bit of activity close nearby. Around 332 there is something, maybe even a tad higher, and these last couple of days lows, 338, that's the one, 337, 338. This is also 336.5 on the US 10. If those yields start to crack again, we may have a bit of a deeper correction, and then watch out for the dollar. So the combination of the numbers this afternoon could or could not trigger some kind of a move. But if it goes above 350, watch out for the dollar. I'd say it's going to be dangerous to be short. So, and that's it for me, Mr. Ryan. Stelios.
Thank you very much, mate.
Gone. But Ryan, back to you, mate. Yeah,
thanks, mate. Yeah, just quickly what Kay was saying there. Let me share my screen. Yeah, 349.70, 350. was the high back in June, mid-June. So that's the area to watch at the moment for 10-year yields as well. Guppy, yeah, very interesting, Gavin, on your levels there. Looks a bit pivotal, that 165. So that 50 fib is a bit of a natural level on its own. So that's a nice bit of confluence there between prior support points and the fib there. So that's another one to look at a bit further down, 164.30. Right, so just quickly, just to show that I wasn't talking out my backside a moment ago regarding the trades room. Let's have a quick look. Where am I going? Into there. So just you can see there, a quick little heads up there. I've just got into a small short $1 6.9906. I've just actually added that at 99.40. So a bit of an add on there as well. But as you can see, straight into the chat room, straight on the things that everyone can see that. And I put the analysis in the main room earlier today. So anyway, that's it for us. I'm going to get back to my trading screen because we've got some moves going on. Need to manage my positions. As always, thank you very much for coming to the Flow Show. I wish you a great day ahead. Watch that data, could be a bit jumpy. Watch those yields. Trade well, trade safe. Wish you many pips. We shall see you tomorrow.
Have a great day.